Guys, Brian Horton again with BK Trading Academy. I'm going to cut to the chase. This will probably be the #1 video, most important video that I've ever done throughout all of the hundreds of videos that we've done on YouTube. Besides the video that I have done that's called 5 Habits Which Allow Me to Quit My Job and Trade Full Time. If you haven't seen that video, I highly suggest that you do so because I'm laying in some information that I think that will be beneficial to you and that was beneficial to me as a full-time trader to quit my job. But guys, in this video, we're going to talk about swing trading is where the money is at. I know some of you guys are scalpers and intraday traders, but I can assure you swing trading is where the money is at. I'm going to break every single thing down to you guys. This is how the big banks and the hedge funds trade. And so I'm going to give you 3 things that you guys should notate and just watch how I trade. Watch how I mark up this chart, guys. And I'm going to express to you why swing trading is the best. And it has a lot to do with your stop loss. So you want to watch it all the way to the end. In the meantime, if you haven't seen that 5 habits that allowed me to quit my job, I'm going to link that at the very end of the video as a suggested video. So you want to be sure to watch it to the end. Without further ado, let's go ahead and get right into it.
Yeah, I know I got problems and I don't know where to go. I don't want to put the blame on you.
All right, guys, so we're looking at Euro USD. I'm going to make this as simple as possible, as fast as possible, and I'm going to express to you and show you why swing trading is the least riskier and why you should be swing trading. Okay, so we're looking at Euro USD here. So #1, you want to identify the trend. We always say that, you know that. You can't identify the big trend unless you're on the higher time frame like the daily or the weekly. I'm on the daily time frame. I have identified that I am in a downtrend. So we're going to start together. I'm going to delete this here. So in a downtrend, you're just simply looking for the ingredients here, right? So we have our peak here. So we've identified the downtrend. To make this simple, all you need to do is simply draw a trend line here, and you're going to connect the top to the bottom here. So we have identified a downtrend. That's #1. It's a lot less riskier when you're trading with the trend than counter trend because we have further pushes to the downside, for example, here. Then we have pullbacks to the upside. So even if you didn't get in at the right time when you sold and it pulled back against you, 9 times out of 10, when it continues that downtrend for you, you're going to gain a lot more pips if you just hold on to that trade a little bit longer. That's the key to swing trade. Swing trading, for those who are new, swing trading is when you're in a trade for 2 or more days, sometimes a couple weeks, maybe even a month or so. However, if you're in a trade for at least 2 days to 2 weeks or so, that's where you make the most profit. But you have to trade with the trend because we have further pushes to the downside. You're going to sell, then you have pullbacks to the upside. And even if you got in at the worst possible entry here, let's just say you got in and you're selling and you got in to a sale right here, price pulled back here. I'm going to get my measuring tool from here to here, 95 pips. And you're like, oh man, I'm down 95 pips. I'm down $95. That's if you traded $1 a pip. Man, how can I recover from this? If you identified a downtrend, then if you just hold on to it for a little bit longer and set your stop loss outside of the trend, then it will go for you. So let's say you entered here and you exited here at this lower low. You could have got at least 67 pips if you hold on to it for a little bit longer. Now, if you counter trend trade, it probably would have wiped your account out. So in order to swing trade, you want to make sure you have a sufficient balance. And if you don't, you want to use a very, very low lot size. Okay, so that's #1, identifying the trend. We identified the downtrend. Now I'm going to copy this trend line here, exact same angle, and I'm going to grab it to the bottom to simply form a channel here. So when it bounces at the bottom of the channel, I'm going to buy. When it bounces at the top of the channel, I'm going to sell. But what's more important than a channel is identifying your levels. Let me show you how to identify your levels here. So your levels are your support and resistance levels here. So if we take a look here, I'm going to zoom in here a bit. If we take a look here, we're looking for wick rejection. We're looking for where candles respected here. So this will be my level here, my temporary level for my resistance. And then here's my temporary level for support. We can see a number of candles bouncing off from this area day after day after day. Before it finally broke through, it came back up to resistance, back here day after day after day, and then it starts to reject to the downside. So I'm going to trade with the trend. This is my downtrend here. I will put in an entry right about here, because I have identified my levels. This is my resistance level. And if you hold on to it for a few days, maybe even a week or so, you can rack up here. Now, finally, where would you put your stop loss? Now, this is key. You would need to widen your stop loss, right? This is contrary to what a lot of traders say. You don't want to have a too wide of a stop loss because if it hits your stop loss, then you'll lose a lot of money. Yes, that's if you're trading recklessly. That's if you don't have a position size calculator, risking no more than 1 to maybe 2% of your account like we teach in our academy. So you want to break down your lot size so that it's sufficient. So where would I put my stop loss at? I may put my stop loss outside of structure here. And oftentimes what I would do is get my measuring tool here on the left side, grab it to where I want to enter, to where my stop loss is. And if I want to stop off here, let's say about 95 pips, that will be sufficient. So I'm going to go ahead and put my stop loss around 95 pips. I know that is outside of the channel. So odds of it coming outside of the channel is slim, very, very slim, because I'm in a downtrend. I've looked at each and every sell and it's respected within my trend line. So odds of it coming out is rare, let alone further out, right? So I'm going to sell right here in my resistance down to my support or even past my support. So if I get my measuring tool from where I want to enter down to, let's say here, about 95 to 100 pips, that's about a 1-to-1 ratio. So if you stay in a trade for a little bit longer than what you would normally do, if price happens to go against you, and let's say it bounced off of our trend line, maybe even go out of the trend line a bit, hold on to it just for a little bit longer. Make sure you're risking no more than 1 to 2% of your account. Be sure to use a position size calculator. If you're unfamiliar with that, we teach you that. You can go to my FX books and there's a whole bunch more calculators that you can actually use. You'll take your balance, you'll break it up to 2%, and then you want to see how many pips that correlates into. So even if price goes against you and you sold and it goes up to our trend line, that's only 30 to 40 pips. But a lot of us don't want to be patient and they think 30 to 40 pips, man, I already lost money. I'm going to exit in that loss. That's why it's very, very important to identify your trend and your levels. If you don't mark your support and resistance levels up appropriately, then that can be a huge game changer to you and it could hit your stop loss. So identifying levels here. So here's a level. This is my support. I can even drag it here all the way across. Identifying levels. This is where it wicked at before price shot up. That's a level. Look at these candles here respecting this resistance zone until it finally broke. I can even bring this even further here where it's respected our lines here. So right here, rejected. So just finding levels is highly important. Finding your trend is very, very important to risk management. I can guarantee you that price wouldn't even come out of this trend line unless there's maybe some news, high impact news or something. If it's high impact news, it will correct within the next few hours or a day or so. So you want to be careful and look at forexfactory.com, for example, for Euro or USD news. But then I can assure you that price will come back down and head back down to our support zone. And oftentimes I even like to add in another position if it goes against me, a very low lot size. Guys, I can't express this enough. This is highly important. This is a highly important strategy, guys. Trading with the trend, swing trading, if you hold on to it for a couple days. I know sometimes some of you guys may have anxiety and say, I have to watch my trade all the time. But these levels are promising. These are the levels that the big boys trade from. And when I say big boys, I mean the big institutions, the banks, and the hedge funds. They look at levels like this. They look at this level such as this here, these peaks here. I can come down here and look at bottoms here. So that's what we want to do. And some of you might ask, how do you know when a trend is over? Well, oftentimes you can look left for clues. So this will be my dominant support zone right here. And it's a dominant support zone because price rejected abruptly from this area right there. So here's a dominant support zone. Sometimes I would even sell, break the support and just wait for a couple months. Price would do something like this, continue this downtrend, right? Until it completes this support zone right here. And I may be in a trade for about a month or two, but I know the overall trend. I look left for clues where price may end up and I trade with the trend. That is why the money is where swing traders are at. You don't want to think like small traders. You want to think like the big banks and the institutions who are actually moving this market. I can't stress that enough, guys. This is probably the most important video that I will make on YouTube. We have a ton of daily analysis. We have a ton of things on our YouTube channel, but this here is all about minimizing risks, right? Understanding that you have to minimize risk also means that you understand that you do not control the market. We're the away team, the big banks and the institutions, they're the home team. And so we're only on their coattails trying to ride what they already know. And I don't care about these minor levels sometimes. I want to care what these big levels are doing here. I want to see what the banks are looking at. They're looking at this price here on the right. And I always say that, guys. But guys, I'm going to show you the 5 habits which allowed me to quit my job and trade full time is right here. Go ahead and click it if you haven't seen it. And I will see you in the next video. God bless you.